Hello, this is Michael Prestwich. I'm president and founder of ImagiSOFT. Today I'm going to demonstrate our Roth IRA conversion software. The purpose of this demonstration is to show you how to take a typical average American client, in this case I'm calling him John I. Sample, who's 60 years old, and his wife, who is Susan Sample, age 57, a life expectancy here of her living until age 92. John has a life expectancy of age 87. And they're just average folks. He's currently working at age 60, and you've probably shown him the Social Security seminar and demonstrated why he should work till age 70. His wife also works and makes $2,000 a month. So 4 plus 2, $6,000 a month, $72,000 a year. As you can see, the filing status is married filing jointly. You can also do itemized deductions if you want to. I'm using a standard deduction. Now, one of the big differences between our software and other software is we do not use tax brackets. We use actual income tax formulas. At age 70, he starts taking his Social Security, $28,000 a year. She starts taking her Social Security, $14,000 a year. We look at the Before tab, and we've input an IRA asset, $500,000, earning 6% return. Now, as you can see, you can put in other assets, and you can make this extremely complicated. I'm trying to make this as simple as possible. Okay, if we look at the Roth tab, we have a before and an after. What are we trying to demonstrate here? Let's look at the before conversion. You can see the red is the taxes. This is a timeline starting at age 60. As you remember, he passes away at age 87. So as soon as he passes away, notice how much thicker the red becomes. That is because Susan is now in a single tax bracket. If you look at the remaining assets, she dies with about $300,000 of assets. Those are all IRA assets, and those will have to be fully taxed to the heirs. So that's another problem that we want to address. If you look at the after situation, you see these funny little green and yellow ones. I'll discuss those in a minute. But if you compare the red, you notice it's slightly smaller, and then it goes away completely. And when John passes away, Susan has tax-free income after that. And at the bottom, she has $471,000 of remaining assets instead of $294,000. So there's about $176,000 of benefit. So going kind of to the bottom line, you see that on the middle screen, the total cost for conversion is $47,569. The total benefit is $176,000, which is the difference between the remaining assets before and after. If you look at the total cash flow, you can see that it's roughly the same. They have the same discretionary income. We've clicked this little button right here, match before discretionary income, so that this number on the before would be the same, $3 million on the before and on the after. Okay, what are we doing? We're now viewing the cash flow summary. We can also view the tax bracket. Let's look at the before and after. As you can see, their tax bracket here, they're going to pay $6,700 in taxes, and they're in the 15% tax bracket. And so what does that mean? There's the 15% bracket isn't used up. So what our goal here is to stagger the conversions up to the 25% tax bracket, use that money to convert it to Roth. And if you look at the after, you'll see we're a little bit in the 25% bracket. This purple is the 25% bracket, but we have stretched the 15% bracket up to the maximum and creeped into the 25%. And so we have a staggered Roth conversion. Now, how did we do that? I pressed this add, and then I gave it a description. The first one here I give is 2017 Roth. I typed that in. I put in the amount, $25,000, and then I clicked, well, I'll show you what I'll click. But that's how you do it with the add. I can also edit this particular one, and that way I can show you what is on the screen here. So that's the 2017 Roth. I just give it any name. I put in 25,000. I clicked the year I'm going to make that conversion. And the tax strategy, you can use current assets. So if you went back to the previous screen and you had some CD assets or some lazy assets, you wanted to use those to pay the taxes, you could do that. But I didn't put in any of those. I just simply made use a distribution. And we're going to pay it in the current tax year. And then we're going to enter the income later. And I'll show you how we do that later on. So there it is. There's what happens after the conversion. And so the difference between the taxes they would normally pay and the $11,600 comes from a grossed up distribution. There it is. So we'll convert $24,000 to a Roth and then make a distribution of $48,000. And since he's over age 59 and a half, we can increase his taxes while he's still working, and that will push him, the combination of those two things will push him just barely over the 15% tax bracket. And then we have $24,000 sheltered from future income taxes. So we did that in 2018. As you can see, I increased it a little bit each and every year, 26,000, 27, 28, because there is an inflation multiplier that we're using on the income. If you went back and looked at the income, how we input it, you can see that we're increasing this $48,000 entered from age 60 to 69, increasing by 2% per year, and this would be his wages. The other thing that we did to give us the cash flow is we went into the before screen and we did this find right here. We said, okay, let's take the money that he has available starting right now, $72,000 a year, increase that by 2% a year from age 60 to 99, and have a total desired income all the way till the very end, till age 100. As you can see, it increases every year. So we just press set, and it calculates that, and then you press OK. Now, he's already making $72,000 a year in wages, and that's exactly what increase we have. So there are no distributions coming out until age 70. Then he retires and he gets his Social Security. And so his Social Security, you notice it dropped from $86,000 to $42,000. That's because that's what Social Security is paying. There's a required minimum distribution at that point that has to come out, but we are suggesting that you take out another $13,000 to get you to the full $87,000. And so that's where we did the calculation. If this runs out of money, this will turn red. It'll say, uh-oh, you're trying too hard. You're taking too much money out. So that's where we got the before scenario in the Roth. Then we clicked the match the before discretionary income, and that's why these charts look essentially the same. When we do this conversion, this green is the money that is becoming Roth. The yellow right here is that what we call the conversion cost. So going back to that umbrella, roughly $5,000 is the conversion cost, and that's outlined by the yellow. But let's go back to the very beginning of this printout. Here's the disclosure page, and then a concept. Would you benefit from a Roth? And it tells you a little bit about it. And what is a Roth? Tells you that there's a tax-free income or a legacy for the heirs. So basically, you're not going to convert all of his $500,000. You're going to convert $195,000 of his money, and the cost is going to be $47,000. So you're going to pull the $47,000 over a period of 7 years out of the 401k, or you're probably going to roll that into your own IRA so that you can have more control. And then it says the before graph on the left shows total taxes of $410,000, whereas the after, it's $211,000. There's roughly $200,000 less in taxes being paid. Are you willing to pay $47,000 to save $200,000 later? That's 5 to 1. I think it's kind of obvious. And then the assets is $176,000 higher during the first 35 years. And so that's the total benefit, is that higher assets, because we have matched the income pretty much dollar for dollar. Now there's other advantages of doing a Roth conversion. There's the graphs that we showed earlier. One of them is this emergency fund. Let's say someone needs a hip operation, or someone ends up in a nursing home and they need $100,000. We take the person's existing tax situation, that $72,000 a year, and we add $100,000 to it. So if you need $100,000, let's say at age 65, you got to just pull it right out of your retirement account, because you absolutely have to have that money. What's going to happen is that you're going to have to pull $132,000 out so that you can pay $32,000 in taxes and get your $100,000 after-tax distribution. And you can see what bracket that puts you into. Here's your 10% bracket, here's your 15%, here's your 25% bracket, and then you're pretty deep into the 28% bracket doing that. If you had $100,000 in Roth, look what happens. It doesn't change your current 15% tax bracket at all. That comes out entirely tax-free. So if you're assuming a 5% rate of return, the difference would grow to $53,000 in 10 years and $87,000 in 20 years. And so then there's some charts that just shows you the hypothetical after-tax comparison of your assets. It's great to have a $500,000 401k, but let's say you died and your spouse takes it in a lump sum. Look what happens. The $530,000 ends up as $360,000, whereas if you start converting it to Roth, even that little bit that we started to convert, the advantage is higher in the first year. So that's what this page is showing. And this red are the taxes that would have to be paid. You can see there's a big chunk of taxes as it continues to grow. Here at age 70, when your account grows over $750,000 and you start withdrawing that money, you've got a huge tax liability, and it's still there at age 94. Whereas we've started to convert some of this over, and the tax liability completely goes away just before John dies at age 87. So that's that page. Here's a hypothetical after-tax comparison using the two strategies. And as you can see, the discretionary income is what we're looking for. What's your after-tax money? And we've kept them the same. And it shows you, here's your cash flow, $72,000. You're going to pay $67,000 in taxes. Here's your discretionary income. And that's the total number that we're concerned about, is the after-tax income. And we've matched that basically every year. If you believe your clients could benefit from this software, please give us a call at our toll-free number, 877-510-4702. Thank you very much.